Hi, and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
Hello everyone, welcome to another Friday chart clinic as the people are coming in. So how is everybody doing? Markets breaking new high, as I can show you today. If you can see it, I think some of you can see this. This is a nice chart. So a new 18-day line change in here. More update this evening on the Friday chart clinic. Last week we banked in another check, which is a kind donation from the premium members who regularly contributed to the membership fee for our premium members, and part of this fee is used to do as a donation for the National Kidney Foundation. So on behalf of National Kidney Foundation, we'd like to say thank you for those who are premium members who for your support that we can do this deal and also make a bit of money for that. So thanks a lot. For those of you who is considering to become a premium members, please do so. Do a bit of charity in there and help out if you can. Okay, be a premium member and therefore you will contribute a bit more. Now I have Bill with me here today, so he's going to give you a bit of update. Meanwhile, if you have any of the stocks, let me know, and Bill's going to say something. All right, Bill, here you go, Bill. I'm just going to put up the
Okay, hello everybody, and welcome to our show. I have a few things to share with you that might be a benefit to you in the weeks and months ahead. The first thing I'd like to share with you is that we had a meeting. Speaking to here, right? Oh, this one. Okay, I will share with you. The other day we had the chairman of Philip Securities. He came to Philip and he gave a presentation to the fund managers and the staff at Philip, and he shared some things which definitely will benefit you in the weeks and months ahead. The first thing he said is that now funds are moving out of Europe, out of the US, and into Asia. So he feels that Asian markets will be very well supported in the months ahead, simply because of the growth rates are much higher. But he did say also that world growth is slowing. World growth is slowing. And that means we should focus more on value shares, dividend shares, income-producing assets. That now is the theme he feels will be for the rest of 2013. He said avoid growth stocks. Avoid small cap shares. The companies with lots of big ideas, but lots of borrowings. He said focus on companies that have very, very low borrowings. Now he did say that someone asked him about REITs in Singapore, which was an interesting question. He said he still thinks that the property market and REITs market will do well in 2013 simply because interest rates are so low. And he said that people are trying to find safe ways to allocate their assets and get a reasonable return. So that was very interesting. Now he did say something that I know that this is not really about investing, but one of the staff asked him. He said, "No, Mr. Lim, you're the second richest man in Singapore. You have over $1 billion Sing dollars in assets or more. Could you give the secret to becoming a billionaire?" So, I mean, that's a great question. And so he said this. He said he gave a very simple metaphor, and this can apply for all of us. He said, well, his hobby is playing golf, and he loves to play golf. Every Sunday he goes to the golf range, and he gets 100 golf balls, and he shoots them, and he hits them. And he said after about 50 balls, his distance gets less and less, and not so accurate. And he said, look, I will never be a great golfer. Never. But he said, in contrast, we go and see Tiger Woods. And Tiger Woods he says, look, every time I hit the ball, I I make the plan. I want the next ball to be better. I want to get better and better at everything I do. So in that way, he said it takes at least 10 years become a success in any profession or business. But he says you have to constantly focusing on improving yourself and getting better and better. Well, obviously, he's the guy who walks his talk. He's made it, and he focused on building Singapore into a very large asset manager. And he did it, he mentioned, by not taking on debt, by financing his expansion through his cash flow. Now, that, in my opinion, is what we look for in companies that finance their businesses through the cash flow. So that was quite interesting, and his perspective on the market. And he did mention that he's trying to expand. He's trying to get more assets, buy more buildings, buy more property. But he said there's nothing to buy. Nobody will lower their price. And that is the reason why he thinks this rally will continue on. People don't want to sell their income-producing assets when the alternative is less than a 0.25% interest in the bank. So that was his advice, and I hope that will benefit you guys, and take that to heart for whatever profession that you're in. Try to get better and better. Try to be the best in what you do. One other example, I mentioned to my dentist, I had a dental appointment last week, and my doctor, I had a tooth that came out, a crown, and he plugged it up, and I'm reminded because he's a very successful dentist, and what he did a number of years ago was he invested a lot of money by going to Germany to learn how to do implants. And at that time, very few dentists in Malaysia did implants. Well, he was a pioneer in implants. And now he is the king, one of the kings of implants here in KL, and makes a really good income doing this. And he's also training up another dentist to leverage on that dentist. So that's the point. His focus is to get better and better and better. And who knows, he might become a billionaire someday. I don't know. But the chances are out there, and that's the formula. Get better and better in what you do. If you're investing, learn as much as you can about the markets. Come to our courses. Improve yourself. Get the edge on those who don't want to get better and better. And those who... He said, and those who are graduates of our course, come back and resit our programs when we do it, because there's definitely more information that we add to our course from time to time. And that way you're getting better and better, and that will add to the bottom line in your trading or investing business. So that's what I would say about markets and improving yourself. But I will mention one thing about the gold market. A lot of people are concerned about gold. It took a huge drop, and by the way, it's now recovered more than half the drop. And yeah, looking at our gold chart, it's made a dramatic recovery from the lows. The original catalyst for the drop was Goldman Sachs advised their clients and the whole world to sell their gold and short sell. And then a few days later, they advised their clients to cover all their shorts and go long and buy gold. So they accomplished their aim to strip as much money as they could from those people who are uninformed, who follow the news. And in our investing, Martin and I, we don't follow the news in the traditional way. We feel that news is there for a reason. There's an agenda to manipulate the crowd to sell at the low and buy at the high. So we try to avoid that, and if you had followed our methods, you never would have been caught in this gold drop. And by the way, the physical market is extraordinarily strong. The authorities, the U.S. Treasury, the Federal Reserve, they tried to break the gold market down as low as they can to panic the crowd into selling all their gold. Because when gold goes up, it means people are losing confidence in fiat paper money, including the U.S. dollar. So they failed because they didn't realize that this would uncover an avalanche of buying on the physical market. Physical market in silver and gold is so tight that it was reported last night that the former chairman of the CME, Leo Melmoud, one who founded it, bought 2 gold futures contracts, and he stood for delivery. And the exchange said, we cannot deliver. We will give you a paper receipt, warehouse receipt. We don't have the gold. So this is what, even when the chairman of the CME cannot take delivery of 200 ounces of gold, which is 2 contracts, something is going on. And all over the world, there is a rush to get physical gold. Premiums are exploding. So if you're holding gold, please don't listen to the news and these analyst reports. Please hold your gold, and I promise you over time you'll be very happy. Okay, and with that, I'd like to bid you a good week ahead, and here's Martin.
Thanks a lot. That's our gold correspondent, Bill Wilmine, okay? Which is always bringing you live from whatever's happening in the gold.